Record. Okay, so let me begin by saying I'm not an expert in insurance. I am not an insurance salesman. So I'm giving you the crust level version of what insurance is, because that's about as deep as my knowledge is. We're not all the way into the bread. We're just at the crust. Okay. I know some about insurance because I had to, because when you become an adult, insurance is something you kind of have to have. And there are versions of it and different types, which we'll get into, but you can't really get away from it. So a lot of what I learned, trial by fire, because I didn't know a lot until I was an adult, and then I had to figure out very quickly, and it's very confusing. Insurance is something that not a lot of people understand deeply unless you are in the insurance business. And part of that, I think, is a little bit on purpose, because then they can make money off of your lack of understanding. But that's just me. If we were all insurance experts, we could probably save ourselves a lot more money. But that's just my personal opinion. Anyway, so let's talk about insurance. We're going to get right on into it. Feel free to, as always, add things in the chat, and I'm happy to answer what I know. And I'll tell you if I don't know something. But we'll just go from there. So what is insurance? So it's what you need, but what you hope you never have to use. So I think, I don't know, insurance can be frustrating because, again, if in a perfect world, you would pay for it and you would never have to use it. So example, car insurance. You have to insure your car. You have to pay for your car. Okay. So you have to pay for it. You also have to pay taxes and register your car every year so that you're, legal to drive on the road. But you also have to have insurance, which means that if something gets damaged, another person specifically, or their property, you have to be able to pay for that. That's where you're going to want insurance, because let's say you hit somebody's car and it totals their car, and the car's value was $13,000. Not very many people have $13,000 sitting in their bank account that they can just write a check for. And that's what insurance is for, because then you've been paying over the course of however long, months, years, usually you've been paying. And so you don't have to pay $13,000. You maybe have to pay $1,000 just up front, a deductible, and then the insurance pays for the rest, hopefully, because sometimes they argue with you about whether they need to pay for it. But that's where insurance is helpful. Hopefully you don't ever have to need it because you're never in a car wreck. But fact of life is we're probably going to get in a wreck, or something's going to happen, and we're going to need to pay for somebody's damages to their car. And that is where insurance helps us out, because then we don't have to pay for it out of pocket. Not to mention, that example is a little silly because you can't even drive a car legally unless you have some sort of insurance. You have to have liability insurance. So, and we'll get into what that means. But you're not supposed to drive a car without insurance. Do people do it? Yes. And if you get caught, you're going to get in big trouble. I don't know if they'll arrest you, but they will definitely not let you drive away if they pull you over and you're not insured. They might impound your car. So anyway, you have to have at least car insurance if you're going to drive a car. But we'll talk about what that means. So you need it, hopefully, but you hopefully never have to use it. And so if your insurance is going great, you're just going to pay money and nothing happens. You're going to pay money into something and it'll never happen. Great. Good. Okay. But seriously, what is it? So in short, it's protection against financial loss. So financial loss is you got your money. Let's say you're working at a job. You've worked really hard. You saved up money. Let's say you've got $5,000 in your savings, and that's over the course of a long time that you've been putting that away. Maybe you're trying to buy a house in the future, or you just want to have it, or you've got kids, you want to start a little nest egg for sending them to college, whatever. You don't want an event like a car wreck to wipe you out. So insurance will protect you against losing all that money. That's what insurance does. So, and there are different types of insurance, different levels, and that's where we're going to get into it. So the three types that you need, I'm using need loosely. You can get away with not having some of these, but I think these are the ones that most people are going to run into and that are probably the most important. So auto insurance, unless you choose to never drive a car. I know in New York City, they say a true New Yorker doesn't have a driver's license because they just use public transportation or taxis or Ubers. They don't ever have to learn how to drive. So, but we don't live in New York City. If you're watching this and you live in New York City, tell me in the comments if you have a driver's license. I would be interested to know. But we're based in Georgia, and Georgia, everything is spread way the heck apart, way the heck apart. I live in a very rural area, and if I want to go to any other grocery store besides Walmart, that's a 30-minute drive, period, or more. So I need to have a car to get around. And that means I must have automobile insurance. You have to have that. So you can't get away with that one unless you choose not to have a car. You don't have to have health insurance. We'll get there. You don't have to have life insurance, but we'll get there. So, but you don't have to have any of these, but again, you better not drive. So let's talk auto insurance first. It is required if you have a car to have some sort of insurance. Now, the one that you're absolutely required to have is liability insurance, which means you're liable, your fault. Like if you do something and it's your fault, you need to cover the other person's damages. So you're driving the car, you hit their car because you're looking at your phone or whatever. Your liability is going to cover them. That might cover their car. It might also cover their medical expenses. Let's say you hit them, they hurt their back. Now you're not having to pay for their hospital stuff out of pocket. Your insurance is going to cover it. It will probably make your monthly payment go up because that's how you're paying for your insurance, is you're paying into it monthly, or some people pay for it yearly, but you're paying for it as you go. That's how you're, you can't just say, I would like insurance, please, and sign a paper and then they pay for all the stuff. You have to give them money too. So we pay our car insurance every 6 months, but we pay like 6 months worth of car insurance. And then after 6 months, we pay another 6 months worth. So we pay it in chunks, but a lot of people pay it monthly. And you can get, if you just want liability, you can get it pretty cheap depending on what your driving record is. So if you have a ton of wrecks, if you're getting, a DUI, which is driving under the influence, if you've gotten arrested for that, whatever, that's going to make your insurance go way, way up, and you may not be able to find someone willing to insure you. That's the other thing. Insurance companies don't want to, because they're a business, y'all. They don't want to insure people who are going to go and make them pay out. Like they don't want that. Like if you have had a million wrecks recently, car insurance is not like, I don't want to be her insurance company. We're going to have to pay a bunch of damages and stuff. Heck no. Here comes somebody with a perfectly clean driving record. Okay, we'll insure that person. Fine. This person here, not so much. So it also matters what your driving history is, because they're not going to want to insure you if you have a bad driving, because they don't want to pay money. Again, it's capitalism, right? They don't want to spend money. They're not over there like, we would love to pay for all of your events that happen. Nope, that's not how an insurance company works. They're in it to make money, and they don't want to have to pay for stuff, which is also why they'll argue with you about whether they need to pay for something or not too. All right. Anyway, liability covers the other person, and you have to have that. Now, collision covers you. So if you have collision insurance, that means you guys have that wreck. Okay, you can pay for that, or the insurance will pay for that person's damages and their health bills, and you can get your car and your stuff covered as well. Because here's the problem. Let's say you have that same car wreck. You can pay for their back issues and their car, but what if you got hurt? And what if your car got totaled, where you're out of luck then, because you paid just for the liability insurance? It's cheaper to only have that one, but because you had that, and some people can only afford that, and that's okay, but you're taking a risk a little bit, because if you get into a wreck, now your insurance is not going to pay for your injuries or your damaged car. Next, and again, y'all, if I'm saying something and you want me to expand on it, or you're not understanding, please let me know in the chat. I'm happy to say. Collision covers you and them. And then comprehensive is like basically a whole lot more, anything under the sun. So vandalism, which I spelled wrong, but vandalism, if somebody were to slash your tires or drag a key down the side of your car for whatever reason, then they would cover that. Theft, so somebody breaks your window and steals something, or steals your car, okay, your insurance will cover that. Acts of God, so this doesn't mean that insurance companies are very religious. That's a blanket term for something that happens that was totally out of somebody's control, like a tree falls on your car, or I guess, I don't know, your car got swept away in a mudslide. I don't know. So most of the time it's trees, or storm happens, you get hail damage. things like that. So those are called acts of God because they're nobody could control it. It happened. So depending on what kind of insurance you get, they might provide you a rental car in the meantime, because some of these, like when you have to get, gosh, y'all, again, this is why it's called Adulting 101, because being an adult is difficult. It is difficult. So one time I'll give you an example. One time I was in a drive-through, okay, for a fast food restaurant, and a woman in front of me changed her mind. She didn't want to get her food anymore. And she just didn't even look. She just went boop and backed right into me. Here's the issue with backing into people. Most of the time, if you hit someone from behind, it's your fault because you were too close. But she backed into me. So her fault because she didn't look. And caused a lot of damage to my car, some body damage, which means like the outside of the car, the actual exterior. She damaged the front end of my car by doing that. The process of getting this taken care of is so so we called the police to come to make a report. They can't do much because it's private property. If we had a wreck on the road, they can do more, but really they can just write a report and say, deal with it. So that's what happened is we got the police report. We then have to show that to the insurance company. We also have to take the car to get assessed someplace. It was still drivable. The headlight didn't work, but we took it to a place that could give us an estimate, which means, okay, we're looking at this car and we think the car has $900 worth of damage to it. They then tell the insurance company, hey, this car has $900 worth of damage. And then the insurance company, if they decide to cover you, because just because you pay for it doesn't mean, if they looked at this police report and the police report said this is everybody's fault, they may not cover you. Or they might say, no, this is actually the person behind's fault. But they didn't. The report was very clear. Person backed into me. And so, yeah, my thing. So I'd have to pay for anything. But the insurance took forever to get that estimate. They decided, okay, since they estimated $900 worth of damage, we're willing to pay up to $900 worth of repair on the car. So I couldn't go to a different shop and them say, it's going to cost $2,000 to fix this car. And my insurance would suddenly be fine with paying that. They're like, no, the estimate said 900. I'm not paying $2,000. Sometimes they'll just write you a check for the car if it's totaled, and they'll say, we'll cover you a car, $7,000 worth. It's really weird, y'all. It's very strange, but it is a pain in the butt. But because of my insurance, I was able to get a rental while my car was being assessed, because that took forever, and while my car was getting fixed, because that also took forever. So it was nice because then I didn't have to be worried about how am I getting around. Because even if you have insurance, if you don't have a car or a way of getting around, then you're kind of, sunk. So, it's a thing, y'all. It's a whole thing. So anyway. Also, the insurance companies talk to each other. So my insurance company had to talk to the girls who backed into me, her insurance company, and argue with each other about how much money everybody was going to get covered and da-da-da-da-da. And did she agree that it was her fault, even though the police report said it was? That they have to hear from them, and it's stress, let me tell you. So, but that's auto insurance in a nutshell. Okay. Again, any questions, let me know. We can always go back to this too, but and I'll try to throw in some stories. I know examples are helpful as well. So moving on, health insurance. So when I originally made this presentation a couple of years ago, it was required that you had health insurance. You had to, and that was through the Affordable Care Act, which got passed, excuse me, I remember when, 2014, 13, 12, one of those. Called Obamacare. It was under his administration that they really pushed for this to get through. So Affordable Care Act is the official name of it. And as part of the Affordable Care Act, they were trying to make it to health insurance was available to a lot more people. And so they said, okay, we're going to require it now. So not just it's an option, it's required. And people, if they didn't get health insurance, would have to pay a fine. And some of these fines were pretty expensive. They have recently, and this was during the Trump administration, made the fine $0. So there's a fine, but they made it $0 fine, which is kind of strange, but there's a fine for $0 if you don't have health insurance. But Congress didn't like that it was required and people were having to pay this fine. So anyway, just a little bit of background. The government has a lot to do with insurance and how this is, working out. And I think health insurance is going to really change here in the next 20 years. So as you guys are growing up and this starts to become a thing for you, you're going to see a lot of changes come, because they're going to try to make it more available to people, but it's kind of a mess, y'all. The health insurance situation is nobody is looking at America and going, well done, you guys are doing it right. Like, I don't think anybody's super pleased one way or the other about how this is set up. So, but we'll see how this is going. So health insurance covers your doctor's fees, your surgeries, any other costs, your medication, if you have to go get testing, x-rays, all of that jazz. That's what your health insurance covers. It's a trade-off. So if you want to not pay a lot of money for going to see a doctor, or if you went to the hospital for whatever, if you wanted to not pay a lot of money, then you would have to probably pay a lot of money every month. So example, it's really expensive to have a baby in America. Like, to go to the hospital and have a baby is very expensive. So the years that I have 2 sons, the years that I knew I was having a baby that year, we would select, because you change it every year, you can, but we would select every year health insurance that was very expensive month to month, but that meant we wouldn't have to pay that much money when we went to the hospital. So, and we knew we were going to have to go to the hospital at least once to have these kids. And if you have to stay overnight at the hospital, you're going to pay a lot of money. So we decided to have the higher cost month to month insurance, so that we would have a lower cost when we actually had to go use the services. So, and that's called your premium. Every month that you pay your health insurance, however much it is a premium. So that's the amount you pay every month to have health insurance. So yeah, great coverage means you're paying a lot every month, but when you get your medical bill after you've had to have surgery or whatever, it's not going to be as much. If you want bad coverage, but you don't get sick very much, you don't think you're going to go to the hospital, you don't need to go to the doctor, you're very healthy, then this might be for you, and you'll pay very little every month. I'm only going to pay, $100. That's really, really cheap, by the way. And so, but then let's say, oh no, my appendix, I have to go take it out, or I have to get it taken out, I'm going to go to the hospital. No, you're going to pay a lot more, because it's a trade-off. Do I want a lot of good coverage, but I have to pay a lot for it up front? Or do I want not so great coverage, but I'm going to take my risk because maybe I won't get sick this year, maybe nothing will happen. So that's how that goes. So I gave you some different words. There's premiums, which is what you pay month to month. If you have, so my husband, his employer is where we get our insurance from. And that's how a lot of insurance works in America, is your insurance benefits are provided by who you work for. If you work part-time, or you work for a company that doesn't offer benefits, that's what we call benefits, are like retirement fund, health insurance. You don't have benefits and you still don't have health insurance, so you might work but not have health insurance. But my husband's job, one of the perks that they offer is health insurance. It's okay. It's not great, but it's all right. So we use his health insurance. And if it was just him, it wouldn't be so bad, but every person that you add that needs to be covered by this health insurance, so me, I'm on his, our 2 sons are also on his, it becomes more and more expensive. So our monthly premium is pretty high, but we go to the doctor a lot. I've got kids, they're young, they're in daycare, they're sick often. One of my kids has asthma, so he's going often for his asthma stuff. Another kid has an allergy to food. He's had to go to the allergist many times. So that's it works out, because we know we're frequent flyers when it comes to the doctor. But other folks, you're a single person, you're healthy, your money might be tight depending on what your job is. Okay, you're going to pick the not so great one. And that's okay, because you may never need to go to the doctor and it might work out great. I will say one year that we tried to go down a level, because we were like, we won't need to be going to the doctor this much this year. We're going to go down a level and not pay as much out of pocket every month. Mistake, because we ended up paying, we had to go to the hospital, and it's just crazy. So y'all, it's a whole thing. Let me go back. All right, let's talk deductibles. So I told you premium, which is what you pay month to month. Deductible, so just because you pay, hundreds of dollars, y'all, some people pay you more, hundreds of dollars a month, a lot of money goes to health insurance. Just because you're paying this amount of money doesn't mean that when you need to get your appendix out and you walk into the hospital, you're getting a $0 medical bill. That's not the case a lot of times. You usually have to meet a certain amount before they start to cover it. Okay. Example, like the car, what I was talking about, you had a $13,000 car that you hit, they'll cover the cost of the damages, but you got to pay $1,000 up front. It's almost like, okay, well, I'll pay 1,000 of it, but you'll cover the rest. Same thing with health insurance. So deductibles are a thing. So you might have to pay if you have your appendix out. Let's say you get, I'm not kidding you, an $18,000 bill for your appendix. That might even actually be a little low. 18,000. Who has $18,000? I can just, not many people. I'll say that. So you'll get this bill and your insurance says, we're going to cover this, but you've got to pay your deductible first. And your deductible is how much you're going to pay first before they start to kick in a lot of what they're doing. So let's say your deductible is $2,500. So you might, if you get this bill, let's say your appendix has to come out. It comes out at the beginning of the year, January, upsetting, but it happens. Then your insurance, so you don't have to pay for it before you leave the hospital. You can just say, bill my insurance. And then the insurance comes back to you and says, here's how much it costs. It costs $18,000. We're going to cover almost all of it, but you have to pay $2,500 first. And that's pretty good insurance. Some stuff, it would not be the case. You would still pay thousands of dollars for that. But the deductible is how much you have to pay before a lot of the benefits kick in. So that's deductible. They will cover some things. So like example, my insurance, I actually don't know what my deductible is. I need to look it up, but they will cover all of your like regular doctor visits or your vaccines, and any testing that you need done at a doctor's office. They'll cover that for free. If you have to go to urgent care, you do have to pay to go to urgent care. That's $100. But then whatever gets done at urgent care is covered. If you have to go to the emergency room, it is $200. So yes, I have insurance, and yes, I pay every month a lot of money. But I walk into the emergency room and I need to be seen at the emergency room. Let's say I slice my finger open. I'm paying $200 at least. I might even pay more depending on what all the stuff they have to do. If I have to stay overnight, oh, now I'm having to pay more. But that's my co-payment. It says it costs about $33,000 to get your appendix removed. See, that's interesting. Thank you for looking that up. That's a lot worse than I thought it was. It can go up to 180. And that's the thing too. Some hospitals will charge you more, less. A lot of these amounts are just made up. Honestly, they're like, oh, let's just charge this much. They'll way inflate it. The hospitals will pick an amount like, $50,000 to get your appendix taken out, because then they debate with the insurance company how much they're actually going to get paid. So they like basically quote them a really high number so that the insurance will come back and knock some of it down and they still get some money. So that's how that works. So yeah, but that's deductibles. So you've got your premium, which is what you pay month to month. You've got your deductible, which is how much you have to pay before some of your benefits are going to get, kicked in. And then you've got your co-payment, which is my copay is when I walk into the emergency room, I have to pay $200 right then. Or if I have to go to a specialist, it's $50. If I have to go to, like tomorrow, actually, I'm going to an allergist myself, and I will walk in the door and I'll pay $50, and they can do whatever else to me. That's how my insurance works. They can test me. We can, get scans, lab work, blood work, whatever. If you're doing no insurance, you have to pay for that out of pocket. You're going to pay for the doctor to see you. You're going to pay for any test, every test, and it's going to be very, very expensive. So you can, so I will say for folks who don't have insurance, you can say to a hospital or whatever, I'm uninsured. Do you have a payment plan you can set up with me? Is there an uninsured discount? And a lot of times they'll knock off like 20 or 30% of your bill if you know you're going to pay out of pocket. So just a little bit of a heads up. Okay, last, we're going to talk about life insurance. What does that mean, to insure your life? This is the one that you're never going to use. Not you. You won't use it. It's not required, but it's a good idea. So it covers your end of life costs, your debts, and it provides for your family. So when you pass away, unfortunately, it is very expensive to pass away in the United States of America, because if you want to have a funeral, it's going to cost a lot of money. If you don't want a funeral, just processing your body after your life has ended is also expensive for the coroner or for your cremation, for your burial. It's very expensive. It's a business too. Why? I don't know exactly why. I think a lot of it just has to do with the specialty involved with morticians and that's how they make their money. And so they have to process bodies. And if you want to be buried, they're going to embalm you, which is a whole process of preparing the body for burial, removing a lot of the body. This is getting a little bit much, but removing a lot of the fluids and internal stuff in the body so that you can be better preserved. You also have to pay for the coffin, and the coffins are very expensive. If you're being cremated, then it just, you're paying for someone to go through the process of preparing the body, cremating the body, and then, giving the body back to the family. And it takes a lot of money for them to do this. I've died. What are you going to do? I know, exactly. It seems like crazy, but it's a business too, y'all. Like, why do I have to pay for my own coffin? I know. I mean, right? There are some people, like, they make a bit, it's really interesting. It's really interesting because you can go and shop for your coffin if you want. You can go, some people do this when they're older. They'll be like, this is the funeral home that I want to use, and I want, they'll go and the funeral home will say, thank you, Mr. So-and-so, for coming in. Here are all of our coffins that we have. Do you know which one that you would prefer when the time comes? And they'll be like, I really like this white one, or I really like this one made out of oak. My grandfather's coffin was made out of reclaimed barnwood because he was, an outdoorsman. So we thought he didn't pick it out, but we thought that was a really cool testament to his life as an outdoorsman, is to have this really rustic kind of coffin. You also, yes, have to buy your own tombstone. Yeah. Yeah. Yes. If you want. I mean, okay, so the money, are you talking about what money is the family using or that you're using? That's where your life insurance comes in. So when you pass away, whatever life insurance that you have, so I'm going to give you an example, like $150,000 life insurance policy. They get, and I don't really know how this works. I don't know if they just write you a check or how this works. This is where I'm limited in my knowledge. Thankfully, I've not had to deal very much with life insurance. I have life insurance for my family, but I know I'm covered. I don't know how much, but I'm going to give you an example, $150,000. So you'll have that available to you for the use. Your family will have that to use towards your funeral, to use towards processing your body, to use towards paying off your debts, because a lot of people will pass away. Yes, let's write a dead person a check. A lot of people will pass away and they still have debts. Like they have, haven't paid off their car yet. And their car, they might owe $10,000 left on their car, or their house. They might have to pay, however much money left on the house. And so your life insurance will help pay for that. And if there's any extra, then the family gets to keep it, and whoever is listed in their will gets to keep it. So if I were to pass away, in old age, a long time from now, my husband would get my money, the money to use to process my body, to pay off any debts I had, and then he would have all of that. This is why, because I'm a true crime person, I like true crime. This is why you'll see a lot of people in families murder, not a lot, but in these murder cases, some folks are killing people for the money because they know that they will get the life insurance money. So they'll kill them and they'll get the money for it. Also, that's a surefire way to get suspected of murder. If you're the person that's supposed to get the money and then you file a claim on that money right as soon as that person dies, you look really suspicious. So don't do that. But yeah, the end of life costs, debts, provides for your family, because some people, let's say you're still working, and unfortunately, if you were young and you were providing for your family, well, that money helps to ensure that your family doesn't just suddenly become totally broke because now you're not working anymore. Now they have money that they can use to help finance their life. So it's really upsetting, but this is just they talk about this all the time. You still pay for it monthly, or I think we pay for ours for each year. We just pay for our life insurance. And then the younger and the healthier you are, the better. Because again, insurance companies don't want really to have to pay for their stuff. They know they're going to have to, but they don't want to. So if you are 88 years old and you have a ton of health issues, a life insurance company is going to go, no, because we're probably going to have to pay that soon. So no thanks. Whereas a young person, they're like, oh, fine, we'll insure you. It'll be a long time. You don't have any, you're not a risk to us right now because you don't have any health issues. So sure, yeah, we'll insure you. That's fine. They actually, when I got my life insurance, sent a nurse to my house to like take blood, measure me, weigh me, interview me about, do I smoke? Do I do drugs? Do I this? Because if I did high risk behaviors, they're probably gonna have to pay out on me sooner rather than later. And they would rather kick that can down the road and probably pay less, because as you get older, you can taper off how much insurance or how much you're insured. So maybe you've got $500,000 of life insurance right now because I'm young. I don't know. That's just the amount of money some people have. When I get to be 60, 70, I might lower that a little bit. I'm like, I don't want to pay so much money every month. And my family doesn't need me to be that expensive anymore, because if I pass away now, I don't have that many debts. I don't have to provide for them. I'm already retired or whatever. So you can kind of taper it off and adjust it later. So that's life insurance. Other types of insurance people might have: homeowners insurance. So if you have a home, you're going to want to have insurance, because if it were to get flooded or some people catch on fire or whatever, then that covers the cost of your house. It also, to some degree, will cover your items if you've insured some of your like stuff in your items. Pet insurance. So if you have a pet, maybe your pet has a lot of needs. They need to go to the vet often. You can get pet insurance, and every month you pay $25. And so you're not going to the vet and paying as much out of pocket. Dental insurance is another one. It's a little different than health insurance, but it's there. And renter's insurance. So if you're renting an apartment, it might be that, if the apartment burns down, you're not paying for the building. You don't own the building, but all of your stuff in your house or in your apartment got burned. So renter's insurance covers the value of the stuff that you have in your house. And so jewelry, so you might insure a ring. Let's say you've got like a very special ring and maybe it's an heirloom, costs some money. You would go get it appraised, which means like you get somebody to look at it and go, this costs about $4,000, and then you would insure it, which means if something were to happen to the ring, were to get lost or stolen, the value of it would get returned to you. So you'd either get money for it, you could buy another ring that's just like it. Other expensive items, so instruments, stuff like that, also works. Boats, cars, whatever. Insurance is for like pretty much everything. So questions, comments, concerns. I know you're like, what the heck? But y'all, funerals are expensive. They are very expensive. I mean, you might walk out of there and you might write a $15,000 check. Here you go. See you later. $15,000, boom. But if you get the life insurance money, then okay, you just use that and it's fine. You can pay for that. But that's pretty much how that goes. Other questions? Anything of value can be insured, pretty much. Anything of value can be insured. So health insurance is weird. Again, I think they're going to make it more available. Not everybody gets health insurance from their employer. There is government health insurance available to older folks and low income folks. So there is a way to access health insurance for some populations if they're not employed or if they don't have an employer that provides health insurance. You could also now, because of the Affordable Care Act, go online and get your own health insurance. You don't have to have an employer anymore, but I'll go ahead and tell you that historically the insurance has not been that great and it's pretty expensive. So some folks are still choosing not to have health insurance because they're like, yeah, even though it's available to me, it's too expensive. I can't afford it. So just, interesting little tidbit there. I know it's like, yeah, the stuff you don't want to know about. All right, so let's do some scenarios. You're driving and suddenly someone stops in front of you and you rear in their car. They need to go to the hospital because they're having back pain. You hit your head on the steering wheel and you feel pretty dizzy. Your car is fine, but their bumper looks pretty bad and you have liability insurance. So what's the first thing you need to do? You can just put it in the chat. What's the first thing you need to do? Yeah, call the police, especially if you're on a road, like that is a public road. So call the cops, get them out there to assess it. Also, since you have liability insurance, who is covered in that situation? let's look. The other person, yes. So you, especially since it's your fault because you hit them, right? Like I said, 9 times out of 10, if someone gets hit from behind, it's the person behind them's fault because they're following too closely. So yeah, that is going to be your fault because you hit them from behind, pretty much. And it's going to cover their damages. But you might have to go to the hospital because you might have a concussion and you have to pay, your insurance is not going to cover your medical bills. But if you have health insurance, then that will pay for it. So, you know, there's that. And then what's going to get covered by insurance, their car, their stuff. First thing you do, please call the cops and just say, and you'll have to be an alarmist about it. Be like, we've had a fender bender on such and such road. And then we'll go from there. All right, next. Scenario 2, we're going to do some math. Woo! You ready? I'm going to introduce another term to you too. You have a $1,000 deductible for health insurance. After that, it's 80/20 co-insurance. Let me stop you there. So $1,000, I'll remind you, is what you have to pay up front before your insurance is going to kick in. After that, it's 80/20, which means they're going to cover 80% and you have to pay for 20%. So whatever else is left, they're going to pay 80% of it. You're going to pay 20%. This is very common. You see co-insurance all the time where they're like, okay, we're going to pay some, but not all. You need an emergency appendectomy. I don't know why I'm just filling the appendix today, but there it is. The total bill for the surgery is $15,000. So how much are you going to pay out of pocket based on your deductible and your co-insurance? Go do some math. I'm going to do some too right here. Hang on. So the total from the hospital is $15,000. How much of that are you going to pay? Thinking. We need some more time. Ooh, okay. So let me tell you how I got my math. All right, so you got $15,000, right? You're going to pay $1,000 up front no matter what because you have your deductible. So start with $1,000, and then we've got how much left? You know, because we're looking at $15,000 total. Get rid of $1,000. That's your deductible. After that, they're going to pay 80%. So you're going to pay 20% of $14,000 because we're getting rid of our $1,000 deductible. What's left? So it is, when we do our math, what is question mark equals 0.2 is 20% of, multiply that by 14,000 is $2,800. But we have to also count our deductible. So $2,800 plus the $1,000 deductible, you're walking away from your appendectomy paying $3,800. This is like legitimate. So you said 3,000, that's pretty close. So you're going to pay $3,800, which, you know, out of $15,000, pretty good, right? But still $3,800 is a lot of money. And that's your out of pocket. You're going to pay for that. That's where you call the hospital. You say, hello, is there a payment plan that I can do? Thank you. I think that's all. Oh, there's a bad storm last night and a large branch from your neighbor's tree falls on your house, causing some damage. Who pays for the damage? This is a trick question, and I don't know the full answer to it. Just give me a good guess. So yes, the insurance does. So hopefully, I think this is one that I saw an article about this the other day. So like people argue about this one. I'm not sure. This would be a nightmare if this happened. I would, if you had this act of God comprehensive insurance, I would call my insurance and say, hello, blah, blah, blah. It could be that the neighbor's homeowner insurance would pay for it. So you might have to get those folks talking to each other, your automotive insurance and their homeowner's insurance, and have them argue it out. Hopefully you won't have to pay for it by yourself. That would be ideal, but this one's tricky. So I'm not really sure, but the first thing I would do is call my auto insurance people. What are some ways you can lower your car insurance payment? There are ways that you can lower your car insurance payment. You may not know this, but fun fact, it's really expensive to insure a young person. So 16, 17, 18 years old, up to about 21, 25, kind of pricey. And then it goes way down. Why? Why is it more expensive to insure a young person? They have a clean driving record. They've never driven before. Why would that be more expensive? Any thoughts why it would be more expensive to insure? Because we are young, all I need to say. Yep. Because the younger you are, the more at risk you are for having a wreck. I am a perfect example of this. I've never had a big wreck, but one time, and I totaled my car, and I was 17 years old, and it was because I wasn't paying attention. I wasn't trying to like gun it. I wasn't trying to like, drag race down the street. I was just being dumb, not paying attention. I was on the phone. So I had a wreck when I was 17 years old, and yep, that will do it. I have never, knock on wood, had a big wreck since then, and I've only had little ones, and every one of them has been somebody else's fault. So I think it's just the brain's not fully developed. We've talked about this, and so we're just like la la la, and so it's expensive. They know that young folks are more likely to be in wrecks, and so they're very expensive. Here's how you can lower it. So taking defensive driving courses, doing like Joshua's Law, which is another thing they've recently added in. I don't know if that reduces your insurance, but I know that there are things you can do where it will lower you. Sometimes like making good grades and getting on honor roll will lower your car insurance. I'm not even kidding. So there are things you can do for that, which is kind of crazy. Yes. Isn't that nuts? I think I had to submit, no, this was however long ago, but I had to submit my like, report card. I think I might have made that up. I don't think I made that up. Yeah. So I think I'm gonna look this up right now because I just pulled that out of my brain, archives. Well, good grades lower car insurance. Yeah. So good student discounts are awarded. You can get lower premiums in your car insurance. So community drivers ed, driving safely, avoiding accidents, not getting tickets. Then that's how you can keep it low. And if you have a good GPA, so another incentive to make good grades, it'll actually save you money. And let's say that you want health insurance. How do you go about getting it? Well, right now, the way the Affordable Care Act is set up, if your parents have health insurance, you're covered automatically until you're 26 years old. It used to be that when you turned 18, you were kicked off your parents' insurance, but now you can stay on until you're 26. That's just by default. The age requirement is way, way, way up. After 26, you're on your own. And then the cases where you could get insurance is through your employer or through the Affordable Care Act, the website where you can get your own insurance there. But again, it's not the greatest, but I mean, it's better than nothing, right? Or unless you want to pay out of pocket, that's one way to live your life. So I think that's all of my slides, questions, comments, concerns. After 26, it's welcome to the real world. Exactly. Yes, it is. I stayed on my mom's insurance until I was 26. I was married. I could have been on my husband's, but it would have raised the amount that we paid every month. And for her, it didn't add any money. She has really good insurance. She was a teacher. So she said, just stay with me till you're 26. No need to spend more money unless you have to. So I did. And it was great. So that's pretty much it. Other last call for questions about insurance. Yep. Talk about the real world, man. This is the stuff, again, they never tell you about insurance. You also will insure like businesses have insurance. When I went into teaching, because that's what I graduated my degree with, they make you be insured as well in case a parent wants to sue you. We live in a very sue happy society. So, I mean, heaven forbid something happened in our organization, but if somebody wanted to sue us, we have insurance for that so that we don't have to pay out of pocket a bunch of stuff. Now, it's never happened. And again, knocking on wood, that never does. But you will insure your business as well so that nobody can clean you out if you were to get sued. It's called, we are very litigious. Litigious means like law, rule, court oriented. That's how we solve problems in the US, is by suing each other. Legitimately is how the system is set up. So because people are so ready to sue anyone at any time, that's what insurance helps us with, is so that we can cover that if we need to. So anyway, any other questions? Thanks for listening. Appreciate it. Hope you guys have a great day. Going to stop the recording now.